So your newsletter is right on point talking about ETFs. We just had we just talked about this historic moment in Canada, the first ETF. What does this mean for the United States? Looking at the U.S. regulatory environment, how likely is this to lead to us finally getting our first ETF in the U.S.?
So I think it sounds like a very positive sign for a U.S. ETF. Of course, nothing is guaranteed, and the SEC's got a whole lot of other issues to be looking at right now. But everything, all the factors of 2021, the Canadian ETF approval, the fact that former CFTC chair Gary Gensler is being nominated as the next head of the SEC, these are signs that would trend positively for a U.S. ETF approval.
Can you just talk a little bit about what's changed over the past year or so in the US, putting the Canadian thing aside, what would make an ETF more possible now?
Yeah, a number of factors have changed. The US market has really evolved a lot. So the last time ETFs were really hitting their peak, let's say hype, um, it was around 2018, late 2017. People were hoping for a ETF, but the market was kind of immature. There was, the futures market really only kicked off at the end of 2017. So right now we have a much more robust U.S. futures market. The actual spot market's evolved. There are new custodians that have entered the space. There are a number of new regulated entities. Even the regulators have evolved their oversight regime around the crypto space. So the market is definitely not the same as it was 3 years ago.
All right. Thank you, Nick, for your regulatory checkup.
Thank you.
All right, that was CoinDesk regulatory reporter Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And our next guest is charged with leading Fidelity Investments' new push to sell cryptocurrency products in Europe. Joining us now is Fidelity Digital Assets Europe head, Chris Tyrer. Welcome, Chris.
Hi, guys.
Hey there. So, Chris, BNY Mellon and Deutsche Bank have announced they intend to offer crypto custody services. Are you nervous about the competition moving in?
No, not at all. I think that, this is a very positive development for the ecosystem. I mean, this market has a lot further to grow and there's a lot more participants left to enter. I think that a rising tide lifts all ships. And I think that the introduction of further high quality service providers to the space is a positive for everybody involved. So we very much welcome. Sorry, go on.
No, I was going to ask, who are the institutional investors you're dealing with? Are they family offices? Are they funds? And are you seeing any slowdown in their interest at all?
No, I mean, I would say, if anything, we're seeing the opposite. So, we've been servicing institutions and corporates going back to 2018, but it's definitely fair to say that there's been a notable uptick in interest over the last couple of quarters. And that's really just been in line with the price, but also the macro environment that we find ourselves in, which Travis spoke very eloquently about. I would say, though, that we're definitely moving into a period where there's a greater diversity of clients that we're speaking with. And so we're really now starting to engage with some of the very large-scale institutions, such as pensions and insurers and so on and so forth. So I think that is a really positive development. The other area that I think is particularly interesting is we're starting to see a lot more intermediaries enter the space. So we think about the large banks and some of the interdealer brokers. I think the news out of the OCC last year, or the guidance, was incredibly helpful in sort of informing some of the discussions that we're having with them right now.
Let's just zoom out for a second, because we'd love to hear more about what's happening in Europe more generally. What is the regulatory environment like in Europe right now? And also, are there certain countries or cities that are emerging as being kind of the crypto hubs of the region?
Yeah, I mean, it's a complex situation. So the way that the regulatory environment has developed over here has been very much a sort of patchwork basis. What we have seen, which we find very encouraging, is the European Commission put out a draft proposal late last year, the what's affectionately known as MiCA, the Markets in Crypto Assets, which is a draft directive that would be the effective crypto asset equivalent of MiFID. And what that will do is it will create harmonization of crypto regulations across the EU. So to give you an idea of what it currently looks like, I think, going back to 2016, 17, 18, a lot of EU members put in place local regulatory framework to give guidance to businesses and also to put in place consumer protection. but that's created a very disjointed regulatory environment. And so for businesses like ours, we need to do jurisdictional analysis in every single country that we want to operate in. And if we want to be pan-European, that requires 27 separate sets of legal opinion and so on and so forth. And not only that, we then need to refresh that and make sure that we continue to operate within regulatory guidance. And so this harmonization that should occur over the next, let's say, 12 to 24 months will be an incredible step in the right direction and allow a greater degree of freedom for businesses to operate throughout the block.
Chris, if you launch a Bitcoin index fund that we're hearing from Fidelity, how would it be different from what's in the market right now?
So I think, there's a difference in, so what we hear from our clients is that there are a number of ways that people want to gain price exposure to Bitcoin. And so some of that might be direct coin custody. They want to actually have legal title over the quote unquote physical asset itself. Other investors that we speak to would rather abstract away the security and perhaps the operational complexity considerations that they might have, and are willing to would rather hold hold shares in a vehicle that provides that price exposure, but in something that's more familiar and maybe requires less of a lift on their side. And so really, the product that we put into market, or the Fidelity Digital Funds did, is really to cater to that emerging demand.
And what's
Chris,
the difference between just owning your own Bitcoin or gaining exposure by investing in Tesla and MicroStrategy directly?
Yeah, I would say that certainly I would say that Tesla, the allocation is still a very small proportion of their overall market cap, and so I don't know that would serve as a particularly good proxy for the Bitcoin price. MicroStrategy might be a slightly different question, but I still think that there's a high number of clients that would rather have that direct exposure and would rather have price exposure that's in a vehicle geared towards providing that price exposure.
Coinbase is the market leader when it comes to custody. We were just talking about custody here, and they're crypto natives. Fidelity, of course, a little bit older of an institution. It's an old Wall Street institution. So what makes Fidelity better, different than what Coinbase and the likes of a crypto native could provide?
Yeah, look, Fidelity is, we've been around for decades. We have millions of clients in the traditional space. We have tens of thousands of institutional clients. We built a product and a set of services really to cater for other institutions knowing how, knowing what we require from our own. And so it's that, and what we've really tried to do is create a very high touch, high service model for a select group of clients. And when I say select, we're not looking to onboard millions of clients to Fidelity Digital Assets. We're really focused on providing a very focused service to a number of institutional investors in the hundreds.
Great. Thank you so much for updating us, Chris, on what's going on in Europe.
Okay. Thanks very much.
Thank you.
All right. That was Fidelity Digital Assets Europe head Chris Tyre. Time now to check in with the crypto Twitter tweet of the day with this viral video of Lily, a 3-year-old who takes a stab at explaining Bitcoin from its decentralized nature to its limited supply to how to custody the digital asset with a wallet. So over the past 20 hours, Lily's video has gotten 1 million views. Children are our future. All right, that's it for First Mover. Coming up, our next show special guest. Our next show tomorrow will be with Shapeshift CEO Eric Voorhees. Thank you, Emily Parker, our CoinDesk Global Macro Editor, and Lawrence Lewitton, Markets Managing Editor. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming at noon is The Hash. You're watching CoinDesk TV.